Hello, traders. It's 8:02 a.m. Chicago time on Wednesday, the 23rd of September, 2020. This is episode number 1843. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Risk allocation today, somewhat mixed to leaning to the risk side, increasing risk. However, I'm seeing some indications that market's kind of resting a little bit. Not much action overnight. The range has been okay in the S&P minis and in the Nasdaq, but overall, the market's kind of pushing towards allocating to stocks. So gold is the big taking is the big loser today. Gold is below the 1900 figure, trading at 1885 and 10 cents, $1,885.10, down $22.05 or 1.18%. Followed by the yen, the euro. The bonds are off only 8 ticks, and the Treasury, the 10-year note, is down 4 big ticks, 8 small ticks. The Nasdaq is unchanged from yesterday's settlement, and the leaders today, Euro Stocks 50 and the DAX. Looking at the overnight session, the GfK consumer confidence out of Germany, this is a big figure, came in at negative 1.6. The forecast is for negative 3, so that was quite a beat. And then we got a couple of figures out of Europe, but mainly we're waiting on. We do have Fed's speaking currently. We are looking for market manufacturing PMI and market services PMI at 15 minutes after the open today. Fed's Chair Powell again today at 10 o'clock. And then we get the crude inventories at 10:30, Fed's Evans at 11, and Fed's Quarles at 2. So the Fed parade continues, and that's where we stand. Relatively light calendar currently. I'm going to dive right in. Actually, there's an announcement I want to make here. I will be in on the Pro Trader series for Bookmap today. Speaking about trading order flow and context, we'll be discussing the way to set things up and to narrow them down towards using order flow to find proper execution areas. You can join this by registering at ft71.com/bookmap 09/2020, all lowercase. Again, ft71.com /bookmap lowercase 09/2020. I put that link into the chat box. And yes, Powell is 9 Central, 10 Eastern. My calendar is actually in Central Time, and I keep having to translate it to Eastern Time to standardize the time zone. Anyway, so I want to make sure you knew about this. Please register if you want to listen in, and the expectation is that it'll last about 45 minutes. Let's take a look at what was expected yesterday versus what we got. Just a quick review. Also some accountability on what was said versus what actually happened. Yesterday, the primary scenario is a likely drop into the 73-ish range, the 73-ish range, potentially even 70 down here, and I was looking for the market to rotate up to 33.08 and a quarter. I put an arrow right there, 33.08 and a quarter. I was looking for a dip, expected dip to bring buyers in, to advertise lower prices for buyers to step in, and then for that dip to be bought and pushed into 33.08 and a quarter, and then for it to fall below the 3,300 line on the close. So dip down, push up to 33.08 and a quarter, fall on the close below 3,300. Here's what actually happened. Yesterday was relatively, what's going on here? Let me just repair these. And 32, 82, 25. Yeah, relatively inactive because just by virtue of the number of bars here on the PNF, I'm using a quarter by 8 PNF, which is in line with my footprint chart. I also use a 4-tick Renko. The idea is to just see rotations and not see not see noise. In any case, we open up. We're in an open auction. We go into an open auction out of range and we dip into the 70. Remember, I was looking for 70 half as the area to push against, and then I was looking for it to rotate up and then continue to 82, 33.08 and a quarter. What it actually did is it gave us an additional dip to 32.58.75. This is the low volume node from the prior day. This was another key area. This stock zone was already there below the 70 and a quarter area, and then I was looking for it again to push to 33.08. 33.08 and a quarter is right there, the high. 33.09 and a half. So we pushed through by 5 ticks, well within the wiggle room for this product. And then we ended up finishing at 32, I believe 32.99 and a quarter, 32.99 and a quarter below the 3,300 mark as expected. So this was completely in line with what was expected, except that instead of turning at in the 70 half area, it actually ended up taking a deeper dip down before catching up with the rest of the scenario, which is okay. My goal is not to anticipate or predict what the future is going to do to the tick, although it's nice that it hit 33.08 and a quarter. It's nice that it closed below 3,300. It's nice that it dipped ahead of time. These are in line with what the auction is expected to do. It's just a guess. It's nice when it does that, but this is not what we're looking for. We're not looking for it to perform exactly as we orchestrate because, frankly, I don't know what's going to happen. I'm just looking at how the auction normally behaves, right? By the way, these auction principles are not limited to the ES. In my opinion, they're across the board. The same behavior exists across many products, stocks, whatever. The market tends to have, the markets are run by human beings, executed by machines, but overall the behavior is the same. Market psychology or mass psychology is really pretty consistent in my opinion. So here's the overnight session. We open up, we test lower, we hold the one of the upper high volume nodes. There were a lot of prongs yesterday, a lot of prongs, a lot of areas to test, and then it holds steady at 93 and then rotates back up and breaks higher yet again and pushes into the next key area. The next key area, if you recall yesterday, I talked about 32.1675. Was it yesterday or the day before? I don't remember. 32.1675 being such a big area to pay attention to right down here, this stock zone right here. And we went and tested 32.1775. So we missed it by 4 ticks. And I talked at the time that this region right here is really important in that, although it's 100 points wide, we normally cover about 52 points per week. We covered 100 points here in just 2 days, and this is another important low volume node here at 33.17 and a quarter, outlined by this stock zone, and the high is 1975. I'm expecting that the market is likely to take pause and test lower based on that. It has accomplished that test already. The problem with this test is it did not occur in the RTH, so it cannot be verified just yet. But overall, the overnight session kind of did its job, and the market has already run up as expected. I don't sit here and predict a rally all the time. I'm not one of these people that every time the market goes lower, I'm predicting a rally. What I am doing is reading the auction. Remember, we had a neutral extreme up on Monday, and we moved away from this high volume distribution down here, moved away, moved higher. That's what portended or predicted this likely continuation higher for push 3308 to get the range and 3317 and a quarter to get the bigger picture high volume node. So I'm expecting that we are likely to rotate back towards that 3293 area for a test, and potentially coming back into 3284 for the point of control from yesterday. Is what I'm looking for today. Expecting it to balance out before it has the energy for the next leg up. That's the main expectation. In terms of what we're doing with the order flow this morning, really, it's been quite orderly. This is ctbookmap.pro. It's been quite orderly. We've been moving towards we've been pushing towards up and down towards some extremes and bouncing off. It's not an easy read. As you can see, the map is quite noisy still. We still don't have solid areas. If you go back, say, a month or two, you'll see when I show Bookmap, it'll show solid areas of bids and resistance, bids and offers that act as support and resistance and are very easy to read. Currently, we're seeing a lot of chop, a lot of these prongs in the order book just popping in and out, a lot of algorithmic kind of play here. Currently, the order flow is such that it is moving along with price. The delta is moving along with price, and we are testing a channel in the short term, testing a triangle in the higher time frame. But overall, I believe that the market is showing signs of exhaustion up above. We do have this upper high volume node from the overnight session that we have walked away from, and we've formed a middle high volume node and shifted the point of control. You can see the point of control shifted to the high end of the range and has shifted back down. So this is another reason I think I believe that it'll translate to us being stuck here or testing lower into today. We'll see. I'm prepared for the rally scenario, but overall, the order flow is saying that it is pushing towards liquidity failing. As you can see here, see those prints. Let me get those dots a little bit bigger. You can see those prints up there. Pushing towards liquidity, failing, retesting that liquidity, failing once again, and then coming back to zipper areas right here. Zipper areas, retesting, failing. We have another zipper area created right there. If we fall below, well, actually, we're doing that right now. We fell below, we're retesting this zipper right here. So the expectation is we continue to march in that direction unless the market does something different. Let's take a look at what's expected for today. Again, I will be presenting on on the Bookmap Pro Trader Series today at 10 Central, 11 Eastern. The link for that is ft71.com/bookmap092020 if you want to attend. Let's take a look at what's expected for today. Spend a few seconds on this. Okay, so what have we got? What is the big picture here? So let's scrunch this up and look at what's going on in the big picture. The primary scenario this morning, the expectation is an open auction right on the edge of yesterday's range. I'm expecting it to attempt to push higher. I'm expecting it to fail, expecting an impulse down, and I'm looking for it to test lower and move towards through the range of yesterday down into the 88, 90, and then come back up and consolidate into the end of the session. I'm expecting this to be responsive selling today, a responsive selling day. I'm expecting the market to base so we can set up for an attack of the next and very, very, very key area, 33, 40, 50 up above. I'm looking for a rest day today. It could run up, it could turn into a trend day. I could be completely wrong. I'm not sure, but that's what I'm expecting. Secondary, open, dip into the range, impulse higher, consolidate back at the open, squeeze for the overnight stat, squeeze into this area. I'm expecting it to consolidate here at 33.17 quarter and then to release and begin pushing north, pushing up and away from price. So in this case, we have tested into the prior day's range. We have found buyers. If we find buyers, then the overnight high is at risk. And then the 33.17 and a quarter becomes an area of battle. And if it clears that area, then we are likely to hit this 33.40 in the next day or so. That's what I'm looking for in terms of both scenarios. The third scenario is an open test higher, drive down. And the third scenario really is looking for a market that has exhausted its exploration higher, open, test the overnight high, impulse down, and then drive towards back towards the 83.75 and then push towards the 78.75, potentially 70.50 again before the bounce. This is a running scenario, so multiple impulses on scenario 3. This is a corrective kind of responsive scenario. Okay, that's what I have for you. Again, if you want to attend at 11 o'clock, I'll be talking for about 45 minutes, looking at what the market context is providing so far and how I'm using order flow to hone in on certain trades. We'll be talking about that this morning. Good luck, and I'll catch you in there. Take care.